Hello and welcome back to this channel. Improve your price action trading strategy in range market. Market is not always trending upward or downward. Instead, the price action may experience a sideways movement. In this case, the price is bound between the high and the low levels of the range, which is resistance and support levels. This may continue sometime for weeks, and it makes sense to have a range trading strategy available to make profit on these non-trending periods. Those traders that always trade in bull and bear environments could damage their trading account if they do not adopt proper trading strategy. There are ways to trade in ranging market and still make money. For example, Bollinger Band, MACD indicator, simple moving average, or trading volume can be used to identify the market entry and exit point for better profitability. It is a good idea to look for range-bound market in a daily chart and use a static and dynamic support and resistance, or upper and lower buildup as a stop loss. In this video, I'll take a look at different ways to trade in a ranging market. Finally, I will show you some practical example to clarify the price action range trading strategy. This is Yahoo Finance FEC stock and the one-time frame. This is a range market. So first, I recommend the traders draw their support and resistance level to see whether the trend experiences sideways movement with a good distance between, that is, if this distance be a good distance, then you can trade. If it be a small distance, then you cannot trade, or maybe the trend is in a choppy fashion that is too risky to enter the trade. Now you can use your price action knowledge to see where you can enter the market. So let's say here the price entered this range market. Then here we have a rejection in price. You can enter the market here, and the market goes all the way up, and you can even blend these two candles and you see a shooting star. That is the sign of a downtrend. So the downtrend comes here. You see a couple of hammers which suggest the trend reversal. So you can probably enter the market and you put your stop loss below the support, maybe 1 or 2 ATR below the support. And also you see here is a big hanging man. That is the sign of possible trend reversal. And the same thing is this hammer and price rejection. That is again the sign of reversal. So, like for example, here you see first of all a price rejections from resistance, and second followed by a hanging man, and then after that a shooting star. That's definitely the sign of a reversal. So and here that's the hammer that you can enter the market. Here the price breaks the resistance level. If you didn't enter the market here, you can enter the market here, and you put your stop loss 1 or 2 ATR below this resistance level, and you see that the price is going up. So you can use your trading action knowledge in this, but in the next graph, I'm going to show you that I install a Bollinger Band, MACD indicator, so how you can proceed with indicators. This is the same graph as we saw before. The price is ranging between these two levels, support and resistance level. While the price is ranging, there are a couple of things may happen. For example, when the price is going up, the resistance, it may reverse. When it hit the resistance, it may have a rejection from the resistance and reverse. or it may break the resistance and go up like here. If they break the resistance and go up, you put your entry above the resistance and you put your stop 1 or 2 ATR below the resistance level. Or it, as soon as it hit the resistance, it may start uh, going in a range band or in consolidation or build up, like here, for example. This is a build up. Now, after build up, normally the price break the resistance and go up. If it does like that, you put your entry above the resistance and you put your stop loss below the build up. Or it may reverse back toward the support. So the same thing it happened for the support. The price come down to support. It may hit the support and reject from the support level and go up. That is reversal. Or it may break the support and go down. Or it may build up for a while and then after that, whether it go down or it go up. I also install MACD indicator in order to show you where precisely you can enter and exit the market. For example, here, that is the price rejection from the support. And from here, the price is going up. And you see here, the MACD indicator, the blue line, is above the orange line showing the prices going up. So you can enter the market and you can make money all the way here. And you can exit the market here where the price is going down. And so all the way here, you are exiting. And from here again, you enter the market again, all the way there. And from here, you can exit the market all the way here. And again, enter the market and you go here and the price break the resistance and go up. You see that the size of a histogram bar is getting larger and larger and larger until here that you get the maximum. So you can exit the market here after that you don't lose money. So you can use price action, you can use MACD indicators, and in order to find out exactly where you can enter and exit the market and make money. This is Yahoo Finance BBD stock. Here you see the prices in range, sideways, and built up. You see that there is not that much going on here. The distance between upper and lower band are very close, so there is not really a good chance to enter and exit the market. The size of the candles are very, very small. That shows the volatility is at its lowest level. Now we have to wait for the price to break out. The longer that the price is in build-up situation, the stronger the price breakout would be. Now, when the price is start breaking out from here, then you can enter the market here and you put your stop loss 1 or 2 ATR below this lower band, lower build up. So this way you can make good money. This is the same graph as we saw before. Here I installed the Bollinger Band with 20 days period and 2 standard deviation to show you that this indicator shows the same result as price action that we saw before. The band shrink and become smaller. You see that? That shows the volatility is at its lowest level, it doesn't suggest to enter the market. It suggests you wait for the price breakout and the band expands. You see, when the price breakout, the band expands. As the breakout occurred, the Bollinger Band expand, and that is the sign of volatility and momentum. You can now enter the market here and make money. If you enter the market here, you put your stop loss 1 or 2 ATR below the upper band, and you ride on this big trend. Now, when you look at when you reach here, you have to exit the market. You see, the sign of a reversal is like that in Bollinger Band. If you see a candle going outside the band, a bullish candle outside the band and closes outside like this, and then the next candle bearish enter the band, the upper band, and closes inside like this, that's a sign of reversal. So you have to exit the market here and you put your ATR, 1 or 2 ATR above the upper band. So that's how you make money. This is Yahoo Finance and BBD stock again. You know, the price is here, the price is going upward, and after the price move upward, it is going in a choppy fashion, which is very hard to forecast the behavior of the trend, and then undergo consolidation here and build up. When it goes under consolidation and build up, the candles become smaller, low volatility, ready to break out or possible breakdown. The longer the price is in range and build up, the stronger the breakout would be. You can enter the trade at the breakout, like here, and put your stop loss 1 or 2 ATR below the lower band. This is the power of price action strategy. This is the same graph as we see before. I only installed Bollinger Band with 20 days period and 2 standard deviation. And you see here the price is in a choppy fashion around the mean. It is very hard to enter the market. It's too risky. Between the lower and upper band, the distance is very small. And so we have to wait for the breakout. Now, when the price breakout, you see the Bollinger Band expands. You see, the Bollinger Band expands, and the price going upward sharply. So you can enter the market here above the moving average, and you put your stop loss 1 or 2 ADR below the moving average. This is your channel, and I'm trying my best to improve your trading knowledge to make profit from the stock market. I have so many valuable trading information to pass on to you, and in order that you receive it on time, please subscribe and support this channel, and thank you in advance. This is Yahoo Finance Air Canada stock. Here I installed dynamic support and resistance, which is moving average with 50 days period. we see the trend is in build-up situation. You see that from here, you see that this build-up situation, the candles are very tiny and small, and the volatility is low. There is not a considerable price movement. You don't see any price movement. Basically, we are waiting for the price breakout, since we know that the price is above SMA 50, the price breakout. You can enter the trade at the breakout. The breakout is here. You can enter at the closing price of this candle, and you put your stop loss 1 or 2 ATR below the moving average. So that's how you make money. This is Yahoo Finance BMO stock and the 1 time frame. This is another range market that the price is ranging around the moving average. So in this graph, I installed Bollinger Band with 20 days period and 2 standard deviation. We can use our price action knowledge in order to enter and exit the market and make money. For example, this is an inside bar suggesting the trend reversal and going upward. So you can enter the market here. And here you can exit the market. You can say the bullish candle closes outside the upper band, followed by a bearish candle closes inside. That's suggesting trend reversal from upward to downward. So you can exit the market here. Or you can say this is an inside bar suggesting trend reversal. Here, that's the shooting star. You can use this shooting star. You know that that's a sign of trend reversal from downward to uptrend. And again, here you have an inside bar, or you can say it closes here with the bullish candle, closes outside the band, outside the upper band. Here, that is small one, outside the upper band, followed by a bearish candle closes inside. That's suggesting trend reversal. And this is another shooting star. That's again trend reversal that you can, exit the market. So you can use all the price action in order to find where you can enter and exit the trading market using price action. And also Bollinger Band can help you a lot. This is the same graph as before. I only installed MACD indicator to show you where precisely you can enter and exit the trading market. Now the green balls is where you can enter the market, and the red is for exiting the market. So for example, this one exactly where you can enter the market, and this one where you can exit the market. This one when you can enter the market here, look, and here you can exit the market. So Bollinger Band, moving averages, MACD indicator, you can use, and your knowledge of price action in order to make money. It's so easy. This is again a range market that the price is ranging between two parallel line, horizontal and support level. Now, these are the places that you can enter the market. For example, you can enter the market here and you may make money, or you can exit the market here And again, you know, when the price is fluctuating between support and resistance, the distance between the resistance and support is considerable that you can make money. So, for example, around here, that is the price rejection. Price rejection. This is a shooting star, and here is again a price rejection that you have to wait for the next candle for formation of the next candle. So you use uh, all type of formations and candlestick blending in order that precisely where you can enter or exit the market, or you can use, let's say, indicators like MACD or Bollinger Band. For example, in this situation, that the price come down from resistance, and again it comes to in kind of range band or in kind of consolidation or build up. You can blend these two candles, for example, the red candle here and the green candle here. That's about 8 candles. If you blend, you can take the open of the first, you can take the close of the last, and then the high and a low of the pattern. So what you get is a, a bullish hammer with a long lower shadow. That's by itself, it represents a big bullish power between these candles. So you know that the trend will go upward because of this bullish power. So you can enter the market here and you can ride on this trend and make money. And finally, the price breakout here. As soon as the price breakout, you can enter the market around this area and put your stop loss to ATR below this resistance level. So you see, my videos are so simple and easy, and if you pay attention, you can be a successful trader. This is the same graph as we see before. The only thing is I installed Bollinger Band and MACD indicator to show you precisely where you can enter and exit the trading market. For example, in Bollinger Band, it shows here the trend is going upward up to here. And in MACD indicator, it shows the trend is going upward. The MACD line, the blue line, is above the orange line, indicating that is uptrend. And you see the size of histogram bar, it's showing increased price up to this point. So you can enter the market here and exit the market here. Or for example, here, that the trend here it's showing going upward, and here the MACD line shows upward too. So here that's the time that you can exit the market, because the price is basically going downward, and this is a small amount of price going upward. So you can enter the market here and exit here, and again another small uptrend here, and you can exit the market here. So basically, MACD indicator and Bollinger Band can help you to find the entry and exit point. Now, in this graph, the price is going inside the triangle, the descending triangle, and start building up around here, and finally it break down. So remember all the time, in a descending triangle, lower high into support, lower high into support, finally it result breakdown. So that is the reason to improve your price action. Before enter the trade, you have to prepare yourself draw your support and resistance. Like for example, this is resistant and this is a support. But whether dynamic or static, horizontal or trend line, moving averages, and so on, draw your support and resistance level. This is the price action. So you know that the price is going to build up, and if it build up, what is going to happen? It's going to break up or break down. So you prepare yourself in order to make money. So in this situation, in descending triangle, lower high into support, result breakdown. This is ascending triangle, and in ascending triangle, one side is horizontal, that here act as a resistant. Another side is going upward, and the price all the time making higher, higher, and higher. Now, when the price entered this triangle, it hit the resistance and it got rejected by this inverted hammer or shooting star, and the price go down. And as soon as it hit the support, it got rejected by this hammer and the price move up and again move down here, and this hammer make the price go up. Here there's another shooting star which result the price go down. Here this is another hammer, bearish hammer, which results the price go up and finally hit the resistance, break the resistance, and have a little bit pull back here and go up. Now, when the price going inside the wedge, you see that all the time the swing high, become big. This is a swing high. This is becoming bigger, and finally it's becoming bigger. And the swing low is becoming shorter. Look, that is the swing low. That's becoming shorter and becoming shorter, and finally it finished. So in ascending triangle, higher low, swing higher low into resistance, higher low of support into resistance, higher low into resistance, higher low into resistance, result breakout. But in descending triangle, lower high into support, result breakdown, as the graph that we saw it before. So you have to remember these two. It's very essential. So higher low into resistance, result breakout, and lower high into support, result breakdown. That's all, folks. If you like this video, thumbs up, subscribe to my channel, leave your comments. Thanks for watching. Take care and see you next time.